Good afternoon, everybody. Let me go through a chart that you're not familiar with looking at, but I want to do something a little different. What we did in the S&Ps today. Very volatile day, as everyone knows. Britain pulled out of the EU last night, and that's what sent the markets moving much lower. I was up late last night looking at the market, and I just couldn't believe how it was trading lower. But if you recall, yesterday, the E-mini S&P 500 futures closed at all-time new highs right here, okay? At over 2113. Look at this. Huge gap to the downside. Huge, about 80, almost 80 S&P points to the downside. But for those of you that know how to take advantage of such a huge gap, I mean, if you've been trading long enough, you know that when you get such a huge move to the downside on the open, I mean, this doesn't come around often. Maybe once a year you get a gap like this, and this was obviously all fundamentally related. So let me just show you a real simple technique to use when you get something like this. Now, the two time frames you're looking at here, this is a 3-minute E-mini chart, and this is a 10-minute chart. I like to look at a 10-minute chart as well, right? So this is a 10, this is where it opened on the 10, right? This is where you opened up on the 3. I do like to use pivots. I like to use the daily pivots. I like to use weekly pivots. And when monthly pivots come into play, that's fine. It gives you more confluence, I like to call it, right? The more areas of support or resistance you have at one given level, the better they become, okay? So look at, the market opened up down in here. And so if anybody, for those of you that know a lot about how I trade or how I'm big into price action, don't like to use a lot of indicators. I like to use, I look at the ranges, I look at the bars. This is the first 3-minute bar right in here, right? So look at, instead of just buying it on the gap down, what I like to do, when you get a huge gap like this, right? What I like to do is I like to wait for that first 3 minutes to form, okay? The first 3 minutes. There you go. This is the range of the first 3 minutes, okay? The low of that first 3 minutes is 2029. The high is 2038. Almost 10 points. So that's a huge range, okay? But where we opened was at a major support level as well. And since we closed, look at this. Now, look at this. Since we closed actually above the monthly and weekly pivot, the dotted red and the dotted blue, we closed right above it, right there, right on the blue, slightly above it. So I took that range, and this is where my strategy comes in. This is pretty aggressive, but I like to do it when the market gaps and there's enough room in that direction to take a trade, right? So once the market traded up through the high of the first 3-minute bar, that high was 38.5. Once the market broke up through 38.5 to 38.75, I was long. Okay, at 38.75. Now you might say, well, God, that's a huge risk if you were risking below the low of that bar. No, I wasn't. My risk was 2 ticks below the mid-range of the bar, the 50% of that bar. Okay, that's it. So again, I was going long at 38.75 with my stop. Okay, at about, I'll give you the exact number. So you draw the fib from low to high. What's the 50 of that? The 50, let's see. 34 even, so 33.75 was my initial stop on that. And on something like this, when you get a magnitude this large of a gap, I like to use at least 2 to 3 times what I was risking. So in this case, I was risking 4.5 points, right? 4.5 points on this trade. What? 38.75 minus 33, 4, 5, 6, 7. No, 5 points. I was risking 5 points on this trade, right? My sell stop was at 33.75, and my buy stop was at 33 to enter the market, 38.75. So 5 points, so a 2 times initial risk would be 10 points. 10 points up from 38.75 is 48.75, right? 48.75. Let me. 48.75 is right here. 48.75, right? 2 times what I was risking. 3 times, right? 15 plus 38, 38 and 3/4 is 53 and 3/4. Look at that. Look at where it went to, folks. 54 even before coming down and backing and filling a little bit. See that? 2 and 3. So that strategy, keep in mind. Okay? Take a look at that. Okay? Take a look at that strategy when you get a big gap, and then you're probably thinking, well, what's a big gap? Okay, well, that's all relative to how volatile the market's been. But I would say is just throwing it out there. If you get at least a 5 to 7 point gap or greater on the E-mini S&Ps, you can use this strategy, and it works extremely well. Okay? Hope that helps. Have a phenomenal weekend, and I will be back with you on Monday. Definitely be sure to watch the webinar Dr. Kenneth Reed and I did yesterday. I think it's really good, especially in this environment where the market's extremely volatile. Okay, actually, it's probably one of the best webinars he's ever done for us. So be sure to watch that. Have a great one, and let me know what you think of it. Bye now.